Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Just to give you a couple other examples, this is the Aussie dollar, and you see the Aussie dollar in this particular case has a couple of just monster downtrends relative to the U.S. dollar. You can see this was back in '09 again, but you can see, look at the breakdown. We're breaking the bands. We're breaking all kinds of support lines. The first support line really would be the 200-day average. It did stop there initially, despite the fact that we had a couple of retests that held real well. You can see each of these retest points, great chances to get back on board the horse. And then you see we actually get a brief little stop out, it looks like right here. There's your stop out coming above that next high. And so you're out of the trade. This is another good example of what I love about this particular different approach with percent R is, okay, I got stopped out there for a little profit, and then we get right back on the horse. It breaks down, and then it follows through 2 days later. And so you're now bear confirmed yet again, and we're trending nicely down with another great retest coming in here. So you just keep on just tightening that stop up. You can see that it's going to gap up just ever so slightly and knock us out and say, now we're going to be in kind of a little bit of a choppy mode there for about a month or two. And then we get going again soon after that. And another monster trend happening right off of this big breakdown. So you can see you get a couple of choppy whipsaws. Then you'll get one of these like you saw in late July where you see multiple great retest points to get back on the horse. You can see why I love retest so much just looking at these charts. Think of it. I mean, the market's constantly in a battle of testing the bulls versus the bears. Who's in control of the right side of the market? Well, the bears are in control here. You can just see how long that trend lasts. That one lasted almost 2 months. 2.5 months really, from mid-July into late September before you finally got a test that was ever so slightly violated. You get stopped out, then again you get right back on the wagon. And even looking at that chart, I said, well, that's a retest yet again. You're still bearish at the end of that chart. People tell me, well, looking back at the left side of the chart's easy. Looking ahead at the right side of the chart's hard. Well, it can be, but if you've got this indicator, it is constantly updating, so you can really see who's winning the war, the bulls or the bears. So Canadian dollar, I mentioned before, can have some really great trends against the U.S. dollar. So this CDD, you can see here, beautiful downtrend that came in place back here. So you see that initial support looks like it's forming over 2 or 3 bars, and then on the 4th bar it's violated. And we even then get this first retest coming in here. And this is another good example where you're seeing a couple of attempts here right into that high intraday to take it out. If you overreact and put your stop as an intraday stop, you'll get whipsawed far too often. So that's why I say the closing stop, the end of day stop, is what keeps me in. So Jeff's asking what keeps me in at the retest. Once I get the retest, I know, Jeff, that high of that bar, I can literally draw it all the way across the chart. Excuse me. Okay, so if I draw it all the way across the chart, so I know down to the penny what my level is. In this particular case, it's right around 124.20, give or take. So if it closes above that 124.20 high, I've got to go. I've got to get out of that trade. But if it doesn't, if it's just intraday trading there, then I can go ahead and hang with that trade, stay with it. So while everybody else is getting faked out, you're giving yourself a chance to really stay with the true breakout. And you can see how frustrating is it when you're trading to get whipsawed out of a trade like that and then see the move that's coming over the next month and a half. You don't want to be on the sidelines kicking yourself repeatedly. I know we've all done it, right? The bottom line is that you want to be able to say, I can ride until it stops me out. Here's your next retest. If you miss that first wave, you've got another chance to say, hey, wake up, time to get on board. You've got another great low-risk bear retest that you could go ahead and add a put position on there. You don't just have to buy a put. You could do a put debit spread. You could buy one put, sell another out-of-the-money put against it. You could do a call credit spread. There's so many strategies you can do, but this is about getting the underlying correct, getting on the right side of the market, if you will, for whichever foreign currency FX option you want to trade. So that's pretty much what we're looking at here. Ray asked about the DI lines, the plus DI and minus DI. We'll just do a quick little look at that. You can see here that we get a bearish cross on the very bottom here of the red negative directional movement above the blue positive. And so then each one of those little test points, let me change my color here so you can see a little bit differently. If we're looking at those, we're saying, okay, each one of those, let's get a differentiated color here. Each one of those tests here, we'd be looking at a situation in which we say, okay, every time we get the DI lines, I call it a kiss, blue trying to come back above red. That's a key test point now that red has established itself as the bearish trend. You can see some of these kind of overlap very closely with the %R. Now here's where the trend changes from a negative directional trend to a positive directional trend for a brief period. Then of course changes back once we cross again and then follow through past that point. So we still look at the follow through points. The cross by itself doesn't mean the whole nature of the indicator, but then it's what does the market do after that point. So we're always looking for that confirmation, but pretty much on any indicator I look at, because how many times have you seen what looks like a turn in the markets and then you don't get the follow through? But if you bought right at the perceived turn, you get whipsawed into a trade that then shoots right back against you. So we want to try to avoid those fake outs and then say, okay, we're willing to give up a bar of action to get the true breakout in the market. So that's really what we're looking for here, is the true trend, the true big trend. And so that's the name of our company, bigtrends.com, because we're looking for those big trends. And frankly, we're trying to avoid what I call the no man's land. The chop, this is a trading range. Do you want to try to trade that chop August, September? No, it's going to whipsaw you. You're going to need a neck brace for how many fake outs you get during that month of time. So we're trying to say, let's avoid that noise in the middle sections in the range. And you can see that it was still in the range as at the top of this chart. You can see it was trying to set up, but it was not following through. So we would say that's still the top of the trading range. You can see the acceleration bands also give you another example that we're not really getting going above those upper bands, lower bands of support down there. We don't try to fade that necessarily and say that's got to come back, but we're saying, hey, let's just wait for the really meaningful trends, because this goes back to the opportunity cost I was referencing to you earlier. You've got to get the most for your opportunity. So for more on FX Options education, you can go fxoptions.com, get upcoming webinars and archived recordings, more on trade alerts, etc. And, of course, you want to go to the ISE page as well. They've got all kinds of information about it here on fxoptions.com. So just you can see, here's a reminder of all these vehicles. This is what I really care about when I'm looking at this, is saying, okay, remember these vehicles that you can trade. Go plug them in on your quote system and have some fun with vehicles like the Yuck. The Yuck can be quite positive to trade. It's not a bunch of yuck. In fact, it's a great trending index, one of my favorites. The CDD, another one I really like to keep a close eye on, along with the Aussie dollar, the AUX, U.S. dollar against the Aussies. So, these are all things that you can really kind of keep an eye on, and these are your optionable symbols. So you go plug these in against the Euro, EUI. You start saying, okay, look, the EUI is a vehicle where, of course, everybody's known about the problems that the European Union has been going through. So when you're having the problems in Greece and then the problems with Portugal and these problems with these various countries, that's having a big impact on the euro. So you're going to see a lot of movement still, I think, on the euro over the next year. Some of it's going to be negative, some of it's going to be positive. The key is let the chart tell you the tale of the tape, and that will help you be a lot more focused on the best moves in the market. So I want to see if we have any other questions before we kind of wrap it up and hand it back over. Does the %R retest method, do you feel you could go actually plot it on your particular quote system? You plug it in with 30 bars, And so instead of most of your systems will usually default you to 10 or 14 bars. I encourage you to plug it in with 30 bars. I also encourage you to, we have some great education on the Big Trend site, and I'm going to just say that for those of you that might not have already seen our 2011 market outlook, so far it's right on the money. I'm just going to put that up there that you can go to bigtrends.com/2011, bigtrends.com/2011. And you can sign up with my compliments for our 2011 market outlook. It has our favorite sectors, including what our outlooks were for some of the major currencies as we looked ahead through this year. Still very much in play here. We've been bullish on the stock market here in the U.S. It's a third year of an election cycle, but there's some interesting insights that we came up with in terms of when you break it down on a quarter-by-quarter basis. We said the first and second quarters is where most of the action in the U.S. stock market is going to be. So far, so good. We've had a pretty positive, almost a 5% gain in the first quarter for the U.S. stock market. And, of course, with options, you can get some tremendous leverage on that. So I encourage you to sign up for the free report there and check it out. That'll help to reinforce the knowledge of what you're picking up here across this particular method of the % R breakout and retest. A way to manage the trade better, trade smarter, and also manage your risk. One of the things we haven't really talked about is how much you're putting into each trade. If you're trading a small account, usually the biggest problem for small account traders is that when you're thinking in percentages, we don't like to invest too much into any one trade. We want to take just little bits of our capital and kind of steadily apply them across a lot of opportunities when you have a positive edge. If you don't have that positive edge, if you were sitting at the blackjack table in Vegas, you'd want to bet it all. If you had to bet, you want to bet it all in one hand, and if you're lucky enough to win, you want to take the money and run. The longer you play a negative expectation game, the more you're going to give it up. So that's why we say only play games where you have a positive edge. Garth asked, he says, if I enter a long position on the euro, can I buy a put option to hedge my position against a loss? Absolutely, Garth. I mean, there's so many different ways you could hedge, and most people just tend to think of it as directly hedging the one vehicle they have. Like if you're in euros, how do you hedge the euros? I still think a great other technique is you get more advanced in learning where the best uptrends are, and at the same time the best downtrends are among these various FX options vehicles. Is potentially even getting some cross trades where you kind of want to be long the relatively strongest currency and short the relatively weakest, using the options, for example, to buy calls on one side. Say you like the Canadian dollar the best and you really didn't like the euro. Well, you could be long the Canadian CDD calls, and you could be also in the buy the EUI puts, and you could have some kind of cross hedge that way too. So that's another thing to consider over time. My pleasure, Ray, and all the sharing today. Definitely want to have you start to be able to apply this stuff and see what it's all about. Of course, if you're not already, I know, Ray, you're already on the Big Trends free email list, but you can go to bigtrends.com and you can get signed up for our free daily email education pieces as well, our daily trend watch, which is very popular too. So that's my shameless plug of the day. I hope you enjoyed it, and I'm going to hand it back over to the good folks at ISE. Remember to check out their site, fxoptions.com, and you'll learn all about these FX options vehicles. Thanks for having me, everybody, and appreciate you taking the time.
All right. Well, thanks to Price for today's presentation. That was really informative. So thank you all for joining us today. If you need more information about ISE FX Options, please visit www.fxoptions.com. To sign up for upcoming webinars, including FX as well as ETF and index presentations, visit www.ise.com/webinars. So thanks again, guys. We hope to see all of you next week. Take care. Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.